Hello guys, if you are an investor like I am, well then you have most likely seen just how crazy the markets are here in 2022. We have stocks that are now down by roughly 20% year to date, and we have Bitcoin that is now below $20,000, and that was a point that very many investors thought was impossible just 1 year ago. It also seems like the chances of a recession is increasing on a daily basis. And in today's video I'm going to talk about exactly what is happening in the market and why these assets are falling in value. Right now, there's actually two things that are increasing, and we actually don't want those things to increase as investors. And the first thing that is increasing is the mortgage rates that have seen their biggest weekly jump since 1987. And of course, inflation, which again seems to be completely out of control. The inflation is now at 8.6%, and that is a 40-year high. It was food, shelter, and gas that contributed the most to the increase in inflation during the last month. And we actually haven't had this high inflation since 1982. Please do remember that all of the data that is just being released is covering last month. So the data that I'm talking about is not accurate for this month. And during this month, well then things could actually be a lot worse than it was last month. No one knows yet. But I'm going to talk about the numbers that we do know are true, and those are the numbers that I'm going to use in today's video. So here's the story. From January to March this year, the cost of living has just kept going up and up and up, and it is becoming more and more expensive to live. And in March this year, we actually reached an inflation of 8.5%. And then did the numbers for April come out, and the inflation here was lower. It was 8.2%. And that is, of course, when investors started to believe that the inflation might be under control. And this was when things went from bad to extremely bad. Because when the numbers from May got released, we actually saw an inflation of 8.6%, which essentially means that the inflation is by no means whatsoever under control. And what the Fed has been doing so far proved to not be working. And right now we have no inflation of how bad it's going to get before it gets better. It could potentially be a lot worse before we start to see the inflation going down. Or it could be going down in the next month, who knows. In response to the extremely high inflation, well then the Federal Reserve started to step in and they increased the interest rate in order to cool down the economy. There is something called the CME Watch tool, which is a place where investors, they're trying to predict the changes in the interest rate. And they actually predicted with an 88% probability that the interest rate would right now be between 1.5 and 1.75%. And guess what? That is exactly where the interest rate is today. How crazy is that? This also raises a very important question, because if investors already before knew this was going to happen, well then why are everything crashing and falling in value? And that is exactly what I'm going to try to answer in today's video. In order to understand what is actually happening in the markets right now, it is extremely important to understand why the inflation is so high and what inflation actually is. Inflation is basically a measure of the increases in prices. So when the inflation is increasing, well then the price of everything that you buy is increasing as well. And therefore it can be said that the value of $100, for example, is decreasing, because you are now able to buy less for $100 than you were before the inflation started to kick in. And that is why inflation has an impact on the value of your money. And the problem here is, of course, that if the inflation increases too fast, well then you have a real problem with the value of your money. Many people seem to think that the reason for the high inflation right now is because of the ongoing war conflict between Ukraine and Russia. And that is actually not the reason for it. Even though the conflict of course made things even worse, then it's actually not the reason why we have such a high inflation right now. The extremely high inflation actually started because of the COVID-19 pandemic. And in January 2022, this article came out saying that despite high wages, inflation gave the average worker a 2.4% pay cut last year. And please remember that all of this is way before Russia decided to invade Ukraine. In the beginning of the pandemic, the government, they decided to lower the interest rate to almost zero. And they did that because they thought that if borrowing money becomes free, or at least as close to free as possible, well then companies and private people, they would take out more loans and spend more money, and thus making sure that the economy would not completely go down. As a side effect of this, we had an investment market that completely skyrocketed, but we also started to see some changes in the inflation, and the inflation started to grow at a more and more rapid pace. At this point in time, the Federal Reserve, they assured us that the increases in prices was simply due to supply problems, bottlenecks and labor shortages as a result of people staying at home due to the COVID pandemic. But the actual inflation caused by the COVID pandemic has proven to be much worse and lasting much longer than anyone anticipated 2 years ago. At the beginning, the Federal Reserve, they said that they had no intention whatsoever of actually increasing the interest rate. However, that quickly changed during 2022 when they realized that the inflation was completely out of control and that they had to do something about it. And recently they just made the biggest increase in the interest rate since 1994, and very many people expect these increases in the interest rate to keep on coming until the inflation is again under control. The question is now, how can we use all of the data that I've talked about in order to predict what is actually going to happen in the future? The truth is, I don't know what is going to happen in the future, but what I can do is show you all of the data there is historically about situations that are very similar to this one, and then make a very good guess and an estimate of what is going to happen with the stock markets in the future. And that is what I'm going to do. Investing right now is super frustrating, and it could potentially only get worse. If you had invested into the S&P 500 index at the beginning of the year, well, then you're down by roughly 20% right now. And for Bitcoin, you're down more than 50%. And if you had kept all of your money in the bank, well, then all of your money would have lost roughly 9% of its value due to the high inflation. So it seems like no matter what you do, then you end up losing. And that is super frustrating. So let's have a look at what the future could potentially look like. The last time the interest rate was increased by 1.75% as it is today was back in 1994. And back then the interest rate was increased 7 times over 13 months, and the interest rate got all the way up to 6%. During 1994, the stock market went down by only 1%. And then in 1995, the stock market went up by almost 35%. So investors are looking at this and thinking that there is a chance for this to happen again. And that is of course the good news. The bad news is that it's probably not gonna happen this time. This time we have a stock market that is already down by 20% year to date, and the interest rate right now is no way close to the levels that it was back then. And we also have an inflation that is completely out of control. So right now the situation is not looking the same as it did back then. So the results might not be the same either. In order to answer the question of where the market is heading in the future, it is super important to know where the interest rate is going in the future. And for predicting the future interest rate, I will use the same tool as I mentioned before, namely the CME Fed Watch tool. Then will the interest rate with a probability of 39.7% be between 3.25 to 3.5%, and a 39.8% probability of the interest rate being between 3.5 to 3.75%. What this essentially means is that there is almost an 80% chance that the interest rate will be between 3.5 to 3.75% at the end of the year. The Fed, they also have its own estimate of where the interest rate is going by the end of the year, and their estimate is 3.4%. The good news here is that the Federal Reserve are doing whatever they can in order to increase the interest rate and thereby cool the economy down and hopefully get the inflation under control again. The bad news again is that very many stocks are very much negatively affected by increases in the interest rate, because an increase in the interest rates means that the future value of their cash flow becomes worth less, and that has an impact on the value of companies. The impact of increasing interest rate, well, that does depend very much on what company you're looking at. If you're looking at smaller companies or tech companies, well, then they are very much depending on the increases in the interest rate, and they tend to do very poorly when the interest rate is increased. Smaller companies and tech companies, they are very reliant on being able to borrow a lot of money at a low cost in order to grow their business. And when the interest rate increases, well, then does the cost of borrowing money increases, which means that it becomes much harder for them to stay innovative. Personally, I don't think that very many investors are ready for that high of an increase in the interest rate, and therefore I do think that 2022 is going to be a really bad year when you're looking at stocks. And I also think it's going to be worse than it is right now. But hopefully the Federal Reserve, they get the inflation under control, and thereby we can start 2023 in a very good way. That is what I'm hoping for, and that is what I think is going to happen with the data we have available right now. But my prediction of the future can potentially change a lot of times, and I would never recommend you to buy based on my recommendations. That was all I had in today's video. If you liked the video, then please press the like button below the video and subscribe to my channel if you want to see more videos like this one in the future. Thank you for watching.